Hey everyone, welcome to another market review. Let's call this one the reassurance review, and we begin with breadth. We had a crossover signal here on this indicator for breadth, meaning the moving average for 20-day stocks above 20-day moving average. The fast one and the short one the fast one went above the short one, and it generally precedes a more substantial rally, not always, especially in bear markets, but we shall see how that plays out. Furthermore, what I wanted to show and talk about was this indicator here, which is basically an amalgam of various sectors' breadth. And what we have right now is a situation in which we usually tend to go much deeper into the green zone before we find the bottom. Like for example, here this is what the April low, this is the December 2024 low, and we can go back and look at many lows in which it goes more deeply into the green area. The difference this time is basically energy. Uh, this indicator goes basically each sector it's assigned a value, they sum it up, and the total is 212.8 in our case out of 1100, which is total maximum possible. But out of this 212.8, we have energy at 90.9, so almost 40% of this breadth indicator not going that deep into the red is because of energy. Had energy gone a bit lower, as was visible in many other lows, like again, remember energy is yellow, and here it's basically not visible. The only reason why we are not deep into the red or into the green in this case is because energy has been holding up, and it's 40% of the breadth we have right now. And also the reason why, in spite of here breadth, in spite of prices going down quite a bit, we are 10% across the board. Basically, SPY is at 9%, but QS is at 12, DI is at 11, IWM is at 12, something like that. In spite of getting to nearly 10%, we haven't really had any negative, even an 80 devol day, and we're getting sort of like rotation. And when we look at the 1 month performance, aside from a few straggles here and there, random stocks, the only sector that has performed well is energy. Everything else is in deep red and looking quite negative. So we are very, very oversold. It's visible across the board. Like for example, on SPY, we are in the 6th percentile positioning wise, 56% in the money puts calls at 6%. And let's compare it to the April lows, and we were at 74 in the money puts and 3% in the money calls. The thing is, if we cross, we are at 634. If we cross below 630, we will be matching the April lows, because 630 is the biggest put level here. This is the biggest open interest level for puts. And if we flip this one into in the money, we would be at equivalent lows to the April levels. Uh, some other stuff as well, like for example, Microsoft is in the 1.59 percentile positioning wise. So almost 99% in the negative here as well. Still under a build program, but as you can see, we are up at levels not seen since the April 2022 lows. The only thing that is kind of iffy from my perspective is not everyone broke down. We still have names in the mega caps that aren't broken down. Tesla is bad. Apple is one of those names which hasn't really broken down. It could potentially enable a drop lower at the index level. Microsoft is down, Meta is down, Nvidia is another name which looks to have broken down, but we're hitting AV up here, so I can still see a bounce. Google is down, Amazon is down, and that's kind of it. Plus names like MU, which again kind of look like Nvidia and trying to break down here. MU is down 50% for the week. Uh, and positioning wise, they are at, like, let's look at Apple at the 50% level, so potentially to have a breakdown. Nvidia kind of the same, like around the 50% level here. It's actually even lower at 160. Stuff like MU, 50% level, had the number one trade on on Thursday, sorry. SNDK crossed below 50%. But the thing is, with these names, I think we can still see more distribution and basically go sideways. So not really breaking down here, but do something like this. More of a week of distribution before eventually breaking down at a later point if this turns out to be a bear market rally. Now, so positioning super oversold, breadth super oversold, but not quite because energy is holding it up. Um, what I really want to see, even if we go lower, is a bear market rally. And we can recognize a bear market rally. Let's go to the 2022 level by the fact that the breadth indicators recover. So it's not about necessarily price, it's about breadth. And like January top, we went down, we recovered. We went down here, recovered, breadth went into the upper side as well. Then we went down again, breadth recovered, and we went all the way in the red zone. We went down again, breadth recovered, went all the way to the red zone. Went down, all the way to the red zone. So this is what I want to see next week, over the next 2 weeks. Uh, and the idea is that also true for this other indicator. Like we will go down, we recover, go to the 70-80 area. We go down, we recover to the 70-80 area. So we'll know we have a bear market rally when the breadth indicators go back to the upper area here, and that's what I want to see. But before that can happen, we can get a capitulation drop somehow. I honestly don't think we get escalation, and I don't over the weekend. We don't get boots on the ground, and we basically get a 2 week pause in the hostilities. But I could be wrong about this one. And let's talk about the situation in which I am wrong. I'll do it on US 500. So let's go lower time frame, or no, let's do it like this. So like I said, anything below 6300 is quite super extreme oversold. So it's the same level as oversold as the April 2025 lows. But if it happens to be a capitulation event, so this is let's put a level on 6300, 630. So this is the level. We don't have a lot to go to hit it. And it could happen regardless of what happens over the weekend because we just go down a bit, we gap down slightly, and then we recover and go. The upside target remains the yearly AVWAP. It's descending and it will probably go down lower as time passes. But maybe like 6,700, 670 would be the target. And this would reset breadth, it would reset everything. But I want to see this no matter what. I will be bullish until we get this. Um, so yeah, this is the baseline. But if we get some sort of capitulation move, for example, we get boots on the ground this weekend, Iran retaliates, they destroy infrastructure across the Middle East generally, the market would have a tantrum. And in that case, we would most likely go to 600 directly. And it's only a 6%, a 5% move, so 600. And if we get the worst case scenario, basically boots on the ground and super escalation, we probably gap down to 2-3%, and then we continue down. We get a 90 devol and maybe even hit 600. Then in that case, this is a buy. You go all in, you close your eyes, and you wait. Because buying at the end of the world, you should be buying the dip. If the world ends, you don't care. If the world doesn't end, then you bought the dip, and most likely you will make money over the longer run. So I think this will happen if we get escalation, and it's not about the US escalation, it's about the Iran retaliation. If we get put on the ground, Iran retaliates by hitting energy infrastructure across the Middle East, then everything is fucked. The market will probably drop 5% in a single day. We get that 90 devol move that would be a capitulation down day. And we get super, super fucking extreme, buy the dip at 600, and that's it. Wait it out. But I don't think we get escalation because the two carriers are out of commission and are not in the area anymore. They keep sending more troops. That to me says we are not ready. Why would, if you were ready to go in, why are you sending in more troops? Why are you waiting for those troops to go in? So no carriers. They probably every time they look at the problem, they realize that they need more, and they're not ready. If they are not ready, they're not ready. Plus, Trump delayed the ceasefire until the 6th. So why would he do that if they wanted to go into on the weekend? I don't think it's a delayed tactics. It's a delayed tactics overall, but it's not a delayed tactics for this weekend to go in. So most likely they are not ready. They don't have the carriers there, so they're not going in this weekend. Next weekend is Easter, so they're not going in that weekend as well. And but from the assumption that they always go into the weekend, we have a 2 week period between the 30th and the 12th, in which nothing will happen with boots on the ground and with escalation. Given that, that's the perfect opportunity for the market to just go to like 630, find the bottom, and just rally for 2 weeks. What's this? 12 until here. Um, Wait. Oh, sorry, until the 10th, not the 12th, because this would be the weekend where they go in if they escalate. So for the market to rally and go, I have to redraw this to go to that level, and that's generally the duration of a bear market rally as well. So we go all the way here, and then we dump. And whether this becomes just a bear market rally or it's actually like some sort of V recovery and we go higher later on depends on the outcome. If we don't see any positive outcomes from the war, it's just job boarding, nothing really happening, and basically no real deal, it's just a bear market rally. If it's more than that and we actually get uh, consensus about peace or something like that, it can actually go higher. But for now, until we see an actual bear market rally here and a recovery in breadth that is sustainable and the bear market rally lasts a couple of weeks, ideally 2 or more, let's look at a couple of ones. So this one, how long did it take? 12 bars, so 12 trading days basically. Uh, and that's one of the faster ones. This one was 17 bars, so 3 weeks and a bit. This one was longer. This was a month long rally basically, well not a month long, but quite a bit. 20, no, it was a month long. So we're missing that bear market rally. The market is very oversold. There is still potential to go lower because not all the mega caps have corrected, or maybe energy somehow joins in. But everything that I see is saying that no boots on the ground right now. Energy, because we don't know the resolution of the war, energy will not roll over. So energy will keep breadth elevated. But aside from energy, the market is extremely oversold, and we are likely to get a bounce. Uh, Given that this move in VIX took us back to 30, if you remember when I did a video here, I was saying that moves up. Let's remove some stuff. So I was saying that when we get above 30, we either go big or go home. So, and that happened. Like we tried to go above 30 and it faded and had this huge red candle. But if we get full escalation, we will probably go to like 47.50 VIX. So if we get escalation over the weekend, we probably do this. This is like 60%, I think. 60 something percent. If we get escalation over the weekend, I think we do this and we find the bottom. If we do not find the escalation over the weekend, we there is no reason for VIX to be above 30. So we should be fading again, go back to the 20 area, something like this, and give us that 2 week potential rally. But that we have to get a bear market rally, and or we have to get escalation. The way the market is sitting right now, going into quarter end, is basically unsustainable. Realized volatility is way under. Sorry, implied volatility is way above realized volatility. So there is no reason for VIX to be at 30 in this scenario. And again, because we get a 2 week window basically, because if nothing happens this one, I don't expect the market or VIX to remain this high, which it will enable the bear market rally. And if we get to that point and we are basically this happens, let's say. So this one does like this, goes up, and we go like to 70, 80. This one again, also goes almost to the red area here. And if we are in this scenario and on the yearly AVWAP, and there is no sign of real de-escalation, and people are still using delayed tactics and not committing to peace, then most likely this is a bear market rally, and we will get another leg down that will make new lows. Something like this. We go here, and we get new lows that will go much lower. Positioning will change as well, so there will be room for new lows, and most likely we will go below 600 when we get to that point. But before we get to that point, we have to see a reset of positioning, we have to see a reset of breadth, and it's simply the mechanics of the market. We cannot get away from it. Yeah. So that's it. I was a bit long and ranted maybe, but I still believe we go higher and this is a buyable dip. We'll see what happens over the weekend from this point on. I explain my reasoning. Hope you guys enjoy this. Have a good one. Bye bye.